Yeah, Dr. Pavan, I just called him up. I think we are waiting for him to join. We can start in another 1 minute.
Yes, sir. I think Harisha Gopala is just joining.
Yeah.
Harish, sir, I made you co-host, sir. Please check, sir, once. We have 1 more minute to go. Harisha, sir.
Yes, sir.
Made you co-host. Just check, sir, whether you can able to.
Sir, you are disabled the parties this joining, sir?
Sir, actually, that we need to do it from the mobile, sir. It's okay, sir. You can just.
Sir, make me host, sir.
Sir, if you want to do it from your side, I'll make you host and then again make me co-host, sir.
Yes, sir, sure, sir. I'll make you.
You can make me co-host and I can do. If you can disable, go to the meeting settings, sir.
Yes, I have done it.
Yeah, you're able to done it successfully.
Yeah,
Thank you.
yeah. I will make you co-host, sir.
Yes, sir. Can make you co-host. That's enough. Yeah. So in the
Done,
laptop only you'll be able to do that setting, sir. Like
yeah, I have done, sir. I made you co-host.
Right. Thank you, sir. Shall we start? 4 p.m. sharp. Yeah.
3, 2, 1, start.
Very good evening and warm welcome to all the financial fitness enthusiasts for this one more wonderful session by none other than our star hero, Dr. Harisha Gopal sir, on the gold investments, the magic of gold investments. We have this PATS initiative, a Pediatric Academy of Telangana initiative in 2021 under the presidency of Dr. Surendra sir and myself as a secretary. So we have initiated that, the holistic development of a pediatrician, be it the physical, emotional, and happiness workshops. And similarly, the financial is one of the key aspect of a holistic pediatrician. So under the leadership and the strong spearheading leadership of Dr. Ajay Kumar sir, who is mentoring us all these days, I think 3 years is a big time where he is conducting all these Sunday sessions for the benefit of all the pediatricians across the country. I think there are people who have joined from the abroad also. So that shows the popularity of this financial fitness program by Pediatric Academy of Telangana State, where every pediatrician is now financially literate. I can sure that everybody is now a financially literate. So all these days we used to say that, we are financially illiterate people and we used to give all the power to the brokers. So now we have very strongly empowered by these stalwarts like Ajay Kumar sir, Tirumala Kolendu sir and Harish Gopal sir, etc. and the entire team. So we are really grateful to you, sir, for initiating this wonderful event. And we are really grateful for all the participants for their active and the participation is really very active. So, and now I invite Dr. Ajay Kumar sir, the lead coordinator for this entire program, the financial fitness program, which is modeled as now financial intelligence program for pediatricians. Over to Ajay sir.
Thank you. Good afternoon, everybody. Thank you, Dr. Pavan Kumar, for that wonderful introduction of this ongoing webinars on financial intelligence for pediatricians and doctors and their families. We are back again on this Sunday with sorry for the last Sunday non-appearance because of our finance workshop at Bangalore, Indian Academy of Pediatrics, which went very well, myself and Dr. Harish Gopal sir, and thank you, Dr. Pavan, for moderating the last Sunday's session on credit cards by Dr. Rajesh Kulkarni from Pune, and it went off well. I saw the recording, wonderful presentation. Thank you very much, Dr. Rajesh Kulkarni sir. And I welcome all the participants this time for another wonderful session. This is our 17th webinar this year, and it is being delivered by our academic coordinator, Dr. Harish Gopal. This is his second webinar this year. He's going to talk on magic of gold investing. And before I hand over the platform to Dr. Harish Gopal as a routine, I will be introducing with a few brief slides of what we have done and what we are expecting in the coming weeks in a few slides. All the previous talks, though they are available on our YouTube channel of Indian Academy of Pediatrics Twin Cities branch and my channel of DRAJY56, I urge all of you to attend the live sessions, not only because the speakers take a lot of trouble in preparing and presenting and spending their time, but also for interaction and question and answer sessions, which are lively and immediate. Your doubts get cleared. So if you allow me to share my screen for 1 second, I will just introduce the opening session of our today's program before I hand over to Dr. Harish Gopal sir. Can you see my screen, Dr. Harish and Dr. Pawan?
Yes, sir. Yes, sir.
Yeah. Yeah, unable to give a PowerPoint presentation, nevertheless. Yes. Yes, as I said, this is Financial Intelligence for Pediatrician and Awareness, Educate You program and personal finance management, as Dr. Pawan said, started about 3 years back by Pediatric Academy of Telangana under the presidentship of then Dr. M. Surendranath, continued next year Arkala Bhaskar sir presidentship, and now under the presidentship as an action plan by Dr. Yashwant Alladi. And we are doing this coordination and Zoom meetings, webinars from Hyderabad. I'm your coordinator, Dr. Ajay Kumar, senior pediatrician and the current co-convener of Central Academy of Pediatrics Finance Committee for 23 and 24 year. I'm also a working partner of 2 firms called Doctors Incorporation and Medi Associates. That is my small introduction to the finance management. Let me, as usual, give the disclaimer and declaration. We are not going to give you any direct investment advice. This is as a awareness and educational program for doctors. We request you to do your own due diligence when you take a step forward to invest in the financial markets or in the capital markets or any investments after listening to our programs. I urge you and I also advise you to take the financial advice from a SEBI registered experienced professional who is a financial planner and a financial advisor, accredited and recognized. But we strictly discourage day trading, tips trading, and investing money on the capital markets on the borrowed money. Our aim is to learn, share, and teach safe, prudent, and long-term investing for wealth generation, wealth multiplication, wealth preservation, protection, and making a corpus so that we all achieve a financial freedom or financial independence in due course. Our faculty, we are grateful from Pediatric Academy of Telangana, starting straight away from Dr. Pawan Kumar, Dr. Harish Gopal, Dr. Tirumalai Kolondu sir from Tamil Nadu, Dr. Sindura, Dr. Vipul Jain from Delhi, Dr. Indra Pavan, Dr. Satish Vadapalli from Visakhapatnam, Dr. Chape Soren, Dr. Ajay Kumar Gupta again from Delhi, Dr. Balwant Jain, chartered accountant from Bombay, Dr. Naresh Biani, pediatric surgeon from Mumbai, Dr. Wilson from Tamil Nadu, Dr. Arjun Reddy from Hyderabad, Dr. Maulik Shah from Mumbai, Dr. Rajesh Kulkarni from Pune. So we have got a very wide and a good repositories of faculty with their expert dedication and knowledge in the personal finance management, and have contributed immensely in this past couple of years in teaching pediatricians, doctors and their families some words and topics about the money management. These were the speakers who took all these topics. This is our 17th webinar this year, starting from February, March of 2023. We are grateful, and I thank from the depth of my heart on my team, Vitamin F3 team, consisting of myself, Pavan, Dr. Harish Gopal, and all other faculty and admins of the WhatsApp group of F3 for their contribution so far. The topics covered, which we have discussed in the WhatsApp, while putting forward the upcoming topics, are planning of personal finances, debt, mutual funds, debt funds, term and health insurance, index funds, stocks, VIP module, basics of stock market, wisely invest in stocks for optimal returns, technical analysis simplified, large cap investing, technical analysis part 1 and part 2, trading view website introduction, and candlestick charts studying, housing loans simplified, children and retirement planning, credit cards, today gold, the magic of gold investing. And we definitely hope that learning this new subject, new field of area for our medical doctors is being done in an accelerated way, and you can improve it by reading some good books, seeing some good webinars, participating on this subject in the peer groups, joining like our WhatsApp group, which we now proud to claim that we are about 1,300 or 1,400 group members participating there, and get yourself self-aware and self-educated with the way you are an aggressive investor or a conservative investor or a long-term investor. Gain knowledge and please deploy your hard-earned savings properly to make your future life stable, and join some National Security Institute on capital markets accredited e-learning courses, which are plenty on the YouTube if you go on the National Stock Exchange. And we, as a voluntary non-profit organization of PATS doing this, will be a beneficial new learning, making you to do new learning journey. Our next programs are on 20th August, that is the next Sunday. Dr. Chetan Mundada from Hyderabad, a pediatric intensivist, will talk on health and term insurance. Then we have got on 27th August, our senior faculty and admin will talk on real estate, Dr. Amish Vora from Mumbai. The upcoming topics discussed and under works and still planning in September and October. Earlier, as we thought, we will end on August 30th. But now with the more and more awareness and volunteers coming up, we have got these topics lined up. And I request you to participate and learn and contribute on these various topics which are planned for the next 2 months. So now come to our today's topic and subject, magic of gold investing. Our speaker is none other than the academic coordinator of this particular webinars, Dr. Harish Gopal. He is a professor of pediatrics from PMR Medical College, Chevella, Rangareddy district of Telangana. I hope I am mentioning this correctly. And he is a very, very passionate and erudite academician, both in the subject of pediatrics and also in the investments. And he has been my pillar of support for this webinars. So your attention for this subject is the lucre of gold, a McKenna's gold, which we have seen in 1969, a blockbuster movie, or not. Dr. Harish will tell us, is the lucre of gold just a mirage, or is it something really worth putting your mind and investing? I now hand over the platform to Dr. Harish Gopal to talk on magic of gold investing. At the end of this talk, I request you to put all your questions on the chat box, or you can unmute when Dr. Pavan comes back and ask questions directly to the speaker at the end of the talk. And all the previously recorded programs are available on Queen branch of Indian Academy of Pediatrics and my YouTube channel. So happy listening and happy investing. Thank you very much. Over to Dr. Harish Gopal.
Thank you, sir. Please stop sharing, sir.
Yeah.
So can you see the screen, sir?
Yes, sir. Yes. Harish Gopal,
Yes,
sir.
sir.
It's very clear.
Yes, sir. Good afternoon. So today's topic is about gold. So when it comes to gold, we'll always be thinking of jewelry shops in your neighborhood, either Lalita Jewelry, GRT Jewelry, and all other jewelry shops. One thing that comes because of the family pressures and other events. So let us see what is gold. Do we really require gold, or it is just a storage of value? Because even the dollar is linked to gold. Okay. So let us see about gold. So why we are discussing this topic? As you know, whenever we are doing this, our investments, we are focusing upon what is known as GRED, greed. That is gold, real estate, equity, and debt. Though we say that majority of our money should be in equity, we should diversify into gold, real estate, and debt also, because as you know, one form of the other assets can help us cushion in a falling market. Okay. So here we'll see how gold will support our equity investments. So gold investments provide protection against inflation because of the returns, which we'll see in the subsequent slides. It also provides decent returns. How much returns? You'll be shocked to know at the end. It also absorbs value erosion in the country's currency. As you know that RBI also, apart from dollar, keeps gold as a reserve, because gold's value cannot become zero. If a country can devalue its currency and make the currency zero, but gold value can never become zero. Even the dollar is linked to the gold amount of gold the country has. And as you know that gold investments can help you in the time of trouble. So why gold? If you see the simple chart, in 2003, it was just 500 rupees. This is a 20-year gold price. In 2003, it was just 500 rupees. And today it is touching above 5,000 rupees. So as you know, it is always in uptrend, though it is not in a straight line. Even the equity markets are also not in straight lines. So similarly, gold always is in a uptrend. So now who determines the gold price for us? So gold price is determined by the gold supply in the market. If suppose government thinks that we have to restrict the import of gold, the gold price increases. If the government decides to put more tax to the gold, then the gold price increases. And also there's something known as the inflation and the interest rates. If interest rates are more, people try to invest in gold, take out money from the gold markets and invest in the gold markets. Okay, take out money from the equity markets and invest in gold markets. And also there's something known as the geopolitical concerns. Now, what is the geopolitical concerns? As you know, the latest geopolitical concern is the Russia-Ukraine war. So when that war was announced, people were afraid what can happen to the markets. They started taking out the money from the equity markets. They started putting it in a safer avenues like gold and debt products. Okay. And there's something also known as the central bank demand. Now, what is the central bank demand? The RBI always maintains a minimum amount of gold reserves in case of emergencies to, to make up its demand. And whenever there is a weakness in the financial markets, people tend to put up in gold. So it is not only the micro environment or the local supply or the local demand which is concerning, it is also the global supply which will help in determining the gold rates next to your neighbor. Now, though I have put gold versus Nifty in this chart, it is always gold and Nifty and not gold versus Nifty. But to say that why not everything in equity, here is a simple chart. Here the golden line is the gold line and the black line is the equity market line. So if you see, whenever there is a equity market rise, gold is below, and whenever the equity market is down, gold is above. So it is not always the same. Both can go above or both can go down, but majority of the time, when the equity market is down, people tend to withdraw money and put it in a safer avenues like gold. Whatever may be the reason for equity market down, they try to put up in a safer avenues. So here is one instance you can see. Here is one more instance you can see. This is 2010 to 2013 market. So this is the classical COVID crash, which many of us have experienced. Here you can see when the market started falling on rapidly, people started to put out in gold and gold prices shot up very high, even it reached to almost highest figures. And again, when the equity market started rising up, gold started to come down. So you should, if you had put 100 rupees in equity markets, it would have become 20 rupees. But if you have put 50 and 50 in gold and equity markets, the loss in your equity market could have been negated by the gain in the gold market. So that is why diversification into other X is very important. Now, what are the ways to invest? Now we have understood till now why to invest in gold. Now, what are the ways to invest in gold? When we tell gold, the first thing we think is a physical gold, which is readily available in the merchant stores. And now later digital gold was started. So what is digital gold? By your Paytm money, Phone Pay, Google Pay. Paytm was the first one to introduce digital gold in our market. So where you can buy small amounts of gold regularly whenever you have money. Next, the government thought to remove the physical gold from our houses and invest in sovereign gold bonds. Okay, so they introduced what is known as sovereign gold bonds, which is given by the government of India. But from ages, we have what is known as the gold ETF and mutual funds. So these are the 4 different ways where you can invest in gold. Now let us see in each one what we buy and what are the difference in these 4 different forms. When you see the cost involved, physical gold, you have what is known as the making charges, value added charges, and all those things. The merchant will always take some amount of charges and sell you apart from the price of the gold. So that is one of the charges. The second charge is you are going to put it in a bank locker. So again, the bank locker charges are there, which you have to bear every year. Okay, but when you sell it, you will not get the bank locker charges or the making charges back to you. You will only get the price of the gold. So that's why the cost of the gold is very high when you take a physical gold. The only advantage of it is you can touch the physical gold. There is no other advantage. In digital gold, the cost is high. I will tell you why it is high in the next slide, but still it is high because the buying, whatever you get on the buying price, you will not get at the selling price. In sovereign gold bond, the costs are very minimal. In fact, you get a discount. So sovereign gold bonds, the cost, there's no extra added cost apart from the cost of the gold. which is available at the market price. Gold ETFs and mutual funds, still it is there, but it is very low, especially in gold ETFs, because there's only the fund manager charges, or in the ETFs only the mutual fund house charges are there. Now coming to the risk factors associated with each of these, when you buy a physical gold, many of us will not keep it in the house, they keep it in the bank. But those who keep it in the house, they can have theft problems, or if you don't buy it from a recognized jewelry or a hallmark jewelry, you can have purity issues. Okay, that is there. They mix more of other metals to the gold. And retail gold, in this area, there is no regulatory person who's seeing all this for Paytm, PhonePe, or Google Pay. If they run away, then your gold is gone. In sovereign gold bonds, there is no risk because it is backed by the government of India. Why this star is there? Because there's very less charges that the government defaults, that only in emergency times. In gold ETFs and mutual funds, there can be daily volatility, okay, that can occur. Now, who is offering you physical gold? You can't directly buy from the miner. There's a retail jeweler, okay, or banks, or online, where you can, from Amazon, Flipkart, you can take physical gold. Who is offering you digital gold? Your Paytm, PhonePe, GPay through MMTC, PAM, or Safe Gold merchants. Now, who is offering you sovereign gold bonds? It is the government of India, that is the RBI, through banks and stock exchanges. Now, who is offering you gold ETFs and mutual funds? It is the mutual fund houses or the stock brokers which are offering you gold ETF and mutual funds. Now, coming to the lock-in, in physical gold, what is lock-in means? You can sell it anytime after purchase. So there's no lock-in in physical gold. You can take one now and you can sell it within 2 minutes also. In digital gold also, same, there's no lock-in. In sovereign gold bond, because we are getting the benefits of tax benefit, there's a lock-in of 8 years, but you can sell it after 5 years, that in emergency conditions. In gold ETF and mutual funds, again, there is no lock-in. Okay. Now we'll see each one in detail, which is better than last. This is the summary. Okay. Now the latest one is the commodities route, which is the futures and options. I'm not going to go in detail. So in futures and options, we have the gold future, which is approximating these grams. But if you know this, you can invest. If you don't know, don't take risk. We have better, so you can invest in sovereign gold bonds. Okay. Now I think you know this famous personality. Okay, I'm not going to name the jeweler. He became famous because of the cost in the gold jewelry. So what he says that you purchase in my shop because other jewelers are putting more cost to the gold. That is in form of making charges and everything. In my shop, it is less. He became famous for that. Okay. So what are the cost, which when I talk of the cost in physical gold, there is making charges, storage charges in the bank lockers, there's GST charges, and there's seller margins when you're talking about physical gold. In digital gold, there's again GST charges and seller margin. The sovereign gold bonds, there is no tax or GST or anything. For ETF, there's demat account charges, brokerage charges, expense ratio. For mutual funds, there's expense ratio. So if you see the cost in all the 3 or 4 forms, only the sovereign gold forms, you don't pay anything apart from the gold price which you are buying at that point of time. Now, I'm going to tell about what is the digital gold. So the pioneer for introducing the digital gold goes to Paytm. So they started selling this Paytm. Now many platforms sell this digital gold, where you can buy it in even with 500 rupees or 200 rupees, you can buy it. But the problem here is this one. You can see that when you're buying, they're selling at 5525 rupees. Okay, they're selling at 5525 rupees for 1 gram. And when you're selling it, they're selling at 5324 rupees for 1 gram. this is straight away 200 rupees discount apart from the GST charges, apart from the 3% GST charges. So you are losing directly 200 rupees per gram in a 1 gram of gold. You can check it out in your Paytm app. So the difference can be 3 to 6% for 1 gram of gold, which is huge. Okay, we are investing to get returns, but the returns are taken away by the mediator. So this is not an ideal form of gold, though we can take delivery. Again, for delivery, there's an option, but again, you have to pay for the delivery charges. So ultimately, you can take it from the physical store. Now, physical gold, as I told you, there is a storage and cost issues. So say you may think that bank is very safe. With the recent ruling, even the bank locker, it is not safe. The bank guarantees only 10 times or up to some banks give 20 times the locker cost. Suppose your locker cost is 2000, they will give you only up to 2 lakhs only. So whatever you keep, even if you keep 20 lakhs worth jewelry, they are not going to give you that much amount of jewelry unless you certify from the insurance company and take a separate insurance company. Now, and second thing is the impurities. Now, if you take it from a recognized jeweler and that too with a hallmark only, you will get a certificate and each gold will be hallmarked and you can see the who is selling it and the hallmark will be imprinted. But still, if you take it from an unrecognized local shop, there may be impurities in the gold. And you will not get any interest for the amount you have invested in physical gold. It is just only the price appreciation. And when you're going for investment, there are better gold alternatives. So we don't recommend buying physical gold. You can buy physical gold only if your wife asks you to buy physical gold for functions. And that too also we have an alternative. Okay, so this is the latest screenshot which was taken on Friday. You can see Nifty had fallen by minus 0.59%, while gold had risen, and silver, which is also risen. Okay, now the third form is sovereign gold ETFs and mutual funds. Now both are same. Yes, it is the same. Only thing is the ETFs are cheaper versions. You should have a demat account, whereas a mutual funds you can do a SIP amount and you don't have the demat. You don't have to have a demat account. So the charges are less compared to the mutual funds. And as I told you, demat account is required for ETFs. And the beauty of gold ETFs is you can sell it whenever you want at the market hours. And SIP setup now Zerodha and major brokers are allowing you to set up an SIP. So the advantage of mutual fund is gone for now. So the only thing is that the expense ratio is less and you can trade it or sell it whenever you need it in case of emergency. The most recommended gold, this one is sovereign gold bond, or what we call it as SGB. Okay. Now what is this SGB? The SGBs are government securities denominated in gold. The bonds are issued by the RBI on the government's behalf. Hence, the gold bonds are substitute for physical gold. Okay. So since the government of India backs it, SGBs are considered safe. You can keep it as a security for your loans also. So that much they are given importance. And purchase and redemption happens in the terms of cash only, and they're not going to give you physical gold. So in simple words, these are given by the government of India, issued by the government of India, and RBI is taking the pains for issuing this sovereign gold bond. Now, how much you can invest? The minimum investment is 1 gram for an individual, and a maximum is 4 kgs for an individual and HUF per year. Above for trust, it is 20 kgs which you can invest. So how to purchase it? In a single financial year, the RBI makes SGB available in different tranches. They'll give you certain dates. In this year, you can take it in 2 different times. In this year, they have announced only 2 times. So this which I'll show you. Now, once they have announced it, it can be brought from banks, it can be bought from post offices, it can be brought from NSE, BSE, it can be bought from brokers also. We'll see how we can purchase SGBs. So this is the press releases by Reserve Bank of India. The first series have already been by June 19 to June 23rd. The second series is upcoming in September 11 to September 15th. So if you buy between these two periods, you will be issued a sovereign gold bond on September 20. Okay. So this is the thing which you should not miss. Remember these days, even if you forget your wife's birthday. Then the price now who determines the price of SGBs? The price of one SGB is fixed per tranche. Okay, now who will determine? It is calculated by the average prices of the Bombay Bullion and Jewelry Association. Whatever is the price is there in the Bombay, what is the 5 days average, they take it. This which price they taking it? It is 24 karat gold which they are taking the price. Previous 5 days of 25 karat gold, not 22 karat gold. And if you buy online, you get 50 rupees discount if you buy online. If you buy physically, go to bank and buy physically, you will not get this 50 rupees discount. It is very easy to buy online, which I'll show you. And if you, the gold bonds are issued for 8 years. If you hold it for 8 years, you will get tax free. And there's a locking period of 5 years for which emergencies you can take it out after 5 years. But if you hold it for 8 years only, you will get tax free returns. Whatever returns you get, you will get tax free. So how can you buy? You can buy offline. You have to buy physically, visit the bank, you can visit the post office, you can visit any of these channels and buy it online, or buy it offline, or you can visit and go to bank online or broker website and take it online. Okay. Now this one, I will show you 1 minute. So can you mute yourself? So if you go to this e-services, okay, I will go to, so 1 minute. So this is the SBI account. So if you come to this e-services, if you click on this e-services, here you see so
Hari sir, unmute yourself, sir.
Okay, sir. Okay, you can, when you come to e-services, you can see the sovereign gold bond scheme. When the scheme opens, if you click on this, if you have money in your account, you can take the gold. If you don't have money, you can't take this gold SGBs. So sovereign gold bond scheme, you can find it under e-services in SBI. In different banks, you can see it in different settings. Okay. In Zerodha, which is the largest platform broker, I will show you. So this is the coin. Okay, you go to dashboard. Here you can find SGBs in the sovereign gold bond. When it opens, here it is written not for sale currently. When it opens, then you can buy it directly and it will get accumulated to your account and you can trade it whenever you want. You can sell it whenever you want, but remember, to get tax benefit, you have to hold it for 8 years. Okay. So this is how you can buy online or through brokerage account. Okay. Now, what is the benefit? Why are you telling SGB? Because we are going to get 2.5% of the interest on the amount which you are invested. For example, if I buy, for example, 5,000 is 1 gram of the gold, and if I buy for 50,000, then I will get 2.5% interest, which is payable semi-annually to my bank account directly. 2.5% of 50,000 I will get in 2 times in a year. So this interest, apart from the price appreciation, I will get when I get it on SGB plus the total price appreciation is tax free. when I redeem it after 8 years. The interest is payable to the investor along with the principal. So, though you get interest, the principal price appreciation, you get it at the end of 8 years. So, this is the biggest advantages of buying SGBs. If you see closely, the 2.5 interest was the savings bank interest many months ago. Now only the savings bank interest has increased. But 2.5 interest plus the price appreciation, you get it in SGB along with the tax benefit, and it is backed by RBI, and it is for 24 karat gold. So because of these things, and you get 50 rupees discount per gram. So that's why SGBs are the best for investment, not for wearing the jewelry. Okay, now taxation, the interest is taxable. Please remember, the interest which you get every year is taxable. But after 8 years, there is no tax on the capital gains. Okay, only the interest is taxable. After 8 years, there is no tax on the capital gains. Now, how do you avoid this tax on the interest rate? You buy SGBs under your mother's name or father's name who are in the elderly tax slab. Okay, so that you can come under lesser tax slab. Okay, now if you can redeem it after 5 years. Okay, but the capital gains can be taxed for early redemption. So please don't take it as a just for don't just see the price appreciation. You keep it like a portfolio diversification for 8 years and take it tax free. Okay, if you know the returns, you'll be shocked. That's why I'm telling you. Okay, now, so what is in summary? This is the summary. So if you see the purchase, sovereign gold bond can be from the banks or through secondary markets, gold ETF from stock exchanges, physical gold from jewelry. Purity is per bullion standard. In gold ETF, it is 0.995. It is not 0.999. Please remember, it is not 999. Gold ETF, it is 995 purity. Physical gold differs from one jeweler to another. Though everybody tells hallmarking, we can't believe them unless you test it from another jeweler. Storage, it is in the books of RBI or in the demat form. Gold ETF demat form. Physical gold run behind lockers. Redemption, okay, redemption, you can take it if you have a sovereign gold bond from a brokerage firm. Okay, gold ETF, you can do it in a real-time basis. Physical gold differs from each jeweler. They can quote different slabs. Liquidity, sovereign gold bond comes at a discounted value because he depends upon the buyer and the seller in the stock brokerage. Gold ETF, it trades close to the fair price. Physical gold, it is substantially at a discounted price. Why? Because when you go to sell, they will always take it at a lesser price. What is the income, man? In the sovereign gold bond, you can get 2.5% per annum in the form of interest. Gold ETF, only the price appreciation. In physical gold, only the price appreciation. There's no income, extra income earned from gold ETF or physical gold. Lock-in period, 5 years in sovereign gold bond minimum, but 8 years for tax. So gold ETF and physical gold, there's no lock-in period. What is the tax treatment? If it is held less than 3 years, income tax slab rate, income tax and all comes under income tax slab rate. And nowadays, if you're purchasing more than 2 lakhs gold, physical gold, the jewelers are also asking PAN card also. So please be careful. You can't just give cash and take whatever form they are linking with your PAN card. So tax treatment, if you are holding sovereign gold bond for more than 8 years, all your returns will be tax free. Gold ETF, we get 20% indexation benefit. Physical gold, you have a 20% indexation benefit, but it is a vague thing. Nobody knows what price unless you have a bill with you. Okay. So this is the ET Times survey which was done. Sovereign gold bonds have returned an average of 13.7% over the last 8 years, which is comparable with equity, though equity has given more. sovereign gold bonds has given 13.7%. So what is the inference from this slide is, it is not SGB versus Nifty. It is SGB and Nifty, SGB and Nifty and real estate and debt. It is not RR. Remember greed. You be greedy in buying gold, but sovereign gold bond only. Okay. Now, can anybody write or tell me the cost of this jewelry? Please tell me the cost of this jewelry. I'll tell you certain secret about this gold. You can put it in the chat box, or anybody can unmute their mic and tell the cost of this necklace, which was taken from the store.
15 lakhs.
10 lakhs.
Okay.
17
Oh.
lakhs.
So highest bidder is Pawan sir of 17 lakhs. Anybody else? Anybody else?
20
Sir, somebody
lakhs.
wrote 5,000 also. I think it's artificial jewelry.
Yeah, correct.
It's
So it
gold.
is artificial
The
jewelry.
gold.
So
Right.
so it is just 10,000. It is, sorry, I don't know. So this is 5,800. So you can take this necklace for your parties if your wife demands it, and change it for every function. So you can't make out between the real jewelry and this imitation jewelry. They are sometimes better, shining and attractive to opposite women. So try for wearing for each party and put your investment in SGB. And thus you can ask, sir, I am investing for my daughter's wedding. Now what to do? Okay, so you can invest in SGBs in every tranche, and the price appreciation and the interest which you get, you can directly buy in the time of wedding, and you don't have to pay brokerage charges or making charges, or even the GST can be waived off after 8 years. So you don't know what can happen. So please don't take physical jewelry. Somebody will rob you after your death. Now, even if you take physical jewelry, you will give it to your daughter. Your daughter will transfer to your son-in-law. Your son-in-law will transfer to mother-in-law. So it will go off to some other family. So don't take only SGB. Thank you. You may have a golden years. Okay. So I'll just try to answer anything. Any doubt?
Yeah, there are. Thank you, Dr. Harish Gopal, sir. Have you finished the presentation, sir?
Yes, sir. Yes,
You
sir.
are ready for.
I'm just reading the question, sir. The
Yeah.
maturity is 8 years, correct, sir? So sell and buy possible in an open market only if it is in a demat account. Okay. Can we buy directly to RBI website? Yes, you can buy, but it is very difficult. You need to have an intermediate broker. Okay. Do SGB send after 8 years, or did they continue? They end it, sir, and you will get cash in your account. The brokerage form will directly give cash. Okay. What is the benefit with the government with SGB? They want to reduce the import of gold, which we get mostly from the abroad. So that's why they're putting more tax and to the airports. That's why you can see smuggling cases to the airport, which is recent. And they want to put it means encourage online gold more one. Okay. And what is you mean by gold leasing? I have no idea about that, sir. Okay. And which way ETF is beneficial? Actually, ETF is beneficial as it can be easily brought anytime at any point of the year, and you can sell it any point out of the year. But SGBs are issued only 2 times or 3 times in a year. It is not issued any day. If you forget on that tranche, you have to wait for the next tranche. And if you want money immediately, you can't sell it. There's a lock-in of minimum 5 years. Whereas ETF, you can sell it anytime you want. How to buy SGB from secondary market? You have to calculate the fair. There's something known as the fair value. What is this fair value? That means each sovereign gold bond is designated a number. So if you get that value, suppose they have issued at 5,200, you have to calculate the fair value. And if you get it at a discount, you can buy it from the secondary market to a broker. Now, what is this fair value? I'm not going to go in detail, but I'll simply tell you have to minus the interest from the principal amount. Will SGB be a regular release? It depends. They'll release 2 or 3 times. Next for this year, next is only in September. Can we buy gold biscuit for future investment? But how are you going to hide it? What is the cost? How to protect it? There's no returns. Only gold biscuit. Okay, you have to, and income tax can track you because you have to submit your PAN card for your gold biscuit. Direct or to demat, which is better? Both are the same, sir. I prefer demat account because in case of emergency you can trade it. Okay. So these were the questions. Any other questions you have, sir? Anybody? Directly you can unmute your mic and ask.
Is there possibility that it will be continued for many years?
No, sir. The period is 8 years. You can see
No,
what
sir.
I do is, sir, what
after
I
8
do
years.
is, sir, what I do is, I don't, if I want to buy 10 grams or 100 grams of gold, I'll not buy in one shot. I will buy 20, 20, 20, 20, 20 in different tranches because each one will expire at different price point time periods. And also the price, if you see, it is not a straight graph. It is not a straight graph. So it is here you can see it is not a straight graph. Suppose I have brought here, the gold may fall down here. So if I buy 20 year, 20 year, 20 year, 20 year, 20 year, I'll be averaging my gold prices as and when it is released. So I'll get an average thing. It is like a SIP in a mutual fund. So my expiries will also be different for different tranches. As you know that, then next tranche was, see in June, it was the first if I brought in June, and June, July, August, September, 4 months is the time period difference. So for after 4 months only the September expiry is after 8 years. So if I buy in different tranches, my expiry also will be in different expiry for different SGBs. So that's how I am going to postpone it. But we can't, once you buy it, it will automatically close and they will redeem your, you will get the cash of the price appreciation to your bank account if you brought to bank, or to your demat account if you brought to your demat account. You can't continue forever like PPF.
So there are 2 questions, Dr. Harish Gopal. One is interesting. If you buy through your bank, like for example, SBI, can you trade it? And
No,
where does
sir,
it get stored?
You can't trade it, sir. They will give you a certificate. RBI will give you a certificate known as Sovereign Gold Bond Scheme to your email. Once you buy it through the website of your bank website, that you have to store it or take printout. After 8 years, RBI will self-liquidate and give the money to the same account which you brought your SGB. Suppose you may say that I have, my account is closed or I have left it wasted. Then then you have to reactivate by giving a KYC. Then the RBI will deposit it. Or you have to again write an email and run behind them. It is an automatic process. Whichever gold you have brought, whichever bank, they'll keep it after 8 years, they'll give it to the same bank. Best is to buy it from a demat broker so that you can track it properly.
And also trade it probably if you are
Sir,
in
You can't
sorry
trade
to
it, sir.
interrupt.
You can't trade it, sir.
Okay.
Sir, sorry
Sir.
to interrupt. Actually, I brought through Axis Bank, but there is an option in Axis Bank that whether you want to link with your demat account. So
Sir,
my
that is, yeah, that
so
you
I
can
had
do,
put
sir.
that option, and it has been linked to my demat account.
Sir, if you have the same demat account of the same bank, see, they are sometimes known as full-time service brokers. Okay, like SDFC. If you buy an SDFC bank, and if you have an SDFC demat account which is linked to that bank, they will give an option of making it in a demat form and trading it. But don't trade it. What is the point? You will not get the price appreciation in 1 month or 2 months. It is a baby. You need to make it grow into an adult. Plus you get interest, which is year annually. You will not get it for 1 or 2 months. So see why you are investing in SJB is most important for diversification, not for simply price appreciation. Though you are getting though you are getting now 14%, it is not the same every time. On an average, it has given only 10%, but over the last 8 years, because of the last 2 years, you are getting 13%. So on 40 years, if you take, it is only 10%. So diversify like a debt product and keep it forever. Don't think debt products are waste, gold is waste, or real estate is waste. We buy only equity, stocks, mutual funds, that's all. Please keep it for lifetime. Okay, not just for 1 month, 2 months, and start trading. The main disadvantage of buying to a brokerage is, though it is easy, when it's there in your app, you will feel like exiting it because you have earned for 13%. If it is bank to bank, you will not like to trade it. It will be there forever. You will get a very good returns after 8 years, believe me.
So is the price of SGP same in different banks, sir, when they sell?
It is the same. It is the same, sir. It is announced by RBI. Only thing is that you get 50% discount if you take it through online.
And after 8 years, the maturity, does it get automatically transferred to our bank, or we have to apply that now you
It
please
get
give?
automatically transferred to the bank, sir. In only 1 to 2%, you may not get it. You have a certificate which you kept carefully. You can write, you can mail them at info@rbidirect.org. They will transfer the amount. But it is automatic. You don't have to run behind pillars. And you can keep it. Suppose you take a home loan or a personal loan, you can keep it like for a deposit, for you can keep it like a security for them. If you don't have, you can take a mortgage loan by giving SGBs for your banker.
So the gold leasing, as I understand and heard, is popularly, if you know the jeweler, you go there, instead of buying it, you put some deposit, take the jewelry of your choice, wear it for the function, go back and return it and take your deposit back. That is what I think is gold leasing of jewelry for the functions rather than gold.
And there are certain schemes by the jewelers where they tell you to deposit every month for 11 months, and they will promise you that they will not put any making charges for the amount invested for the 11 months. But please don't do it, because he is getting your money before 11 months, so that you can invest the same amount in the equity, or you can directly take gold if you want for functions, but don't do the schemes. It is not worth it. And there are many jewelers who have reduced their making charges. GRT gives some 20%. You can just go to market, you get a best deal for the jewelry. So try to invest only sovereign gold bonds, and please educate your wives and mother-in-laws for taking online sovereign gold bonds. They will not agree. They will tell that what is the use of money if you cannot touch it. So you can take it minimal physical gold. Don't like to take every time for a function one jewelry.
Then there is the interest which is generated, as you said, 2.5%.
Yes, sir.
Is this taxable, sir?
It is taxable, sir. Unfortunately, it is taxable, but still you're getting something, sir. So that's why I advise you put it in your mother-in-law, elderly people, so that they'll commit in a 5% tax break, especially females. You have a higher tax slab, so that interest, they may not be working also. Your grandmother, if she has an account, you can take it from her account. She may not be earning even 5 lakhs also. So the entire interest will be free. Your money, but your grandmother's account, you will get entirely free. Your tax will become, interest rate will become tax free.
Sir, one question for senior citizen on fixed deposits interest, there is a no tax. Some 15F or 15 form like that we can
15H.
Huh.
That is only
Then
if
that
you
can
don't
be-
have that is only if you don't have a PAN card. So there's an
Okay.
option that you only if you don't have a PAN card, you can write 15H and tell that you're going to pay later when you file the income tax. So here it is not like that. In SGBs, it is automated. When you are opening a bank account, you have to give a PAN card. When you are opening a brokerage account, you have to give a PAN card. So automatically it gets linked to your PAN card.
Okay. Okay, sir. Okay.
Sir, Dr. Prachi has clarified now the tax slab for both the genders is same, she says. Is
Same,
it
sir,
true?
but still, sir, less than 7 lakhs, and again, it differs from new tax slab and old tax slab, sir.
Yeah.
But what I mean to say is that those your grandmother will not be earning,
Yeah,
or
in
even
the
your
tax bracket.
elderly mother may not be earning. So you can take SGBs through them.
Yeah.
Well, not from your account if you are in 30%. And how much you are going to invest SGBs, I am doubting. Only if you invest in lakhs, you will be getting 2.5%. If you are not, you are investing 10,000 and say that, oh, sir, 2.5%, I'll get tax slab, it's not worth it.
Yeah, Dr. Khurana in our WhatsApp has written, and he wanted to answer from you. Is SGP better than 5-year deposit scheme or senior citizen savings scheme?
Sir, it is totally different, sir. Senior citizen scheme, the interest is taxable. Whatever interest you get, 5-year senior citizen, I think interest is tax free. But the interest what you get is only 6% or 7%. Here you're getting minimum in golds, any investment in gold. It has seen over the 40 years 10%. In the last 8 years, as you can see, you're getting 13%. So you are getting more returns than your fixed deposit. So
As you
better
have-
buy gold bonds, and it is safer. And even in fixed deposits also, if there's a bank robbery, your bank will, even if you have 1 crore fixed deposit, the bank will guarantee you only for 2 lakhs. Remember that. Your bank robbery is there, bank will not guarantee for 1 crore. Only 2 lakhs is the bank's duty
Guarantee.
to give you back. Guarantee. So don't think I put 1 crore in my savings account, it is completely safe. They will tell robbery, gone.
So Chakrapani sir, our very senior pediatrician, said teaching your wife about the gold investment rather than digital, rather than physical, is a very tough job.
Yes, sir,
On
it
a
is
lighter
always
note.
tough tops because gold is emotionally linked. Many wars have been fought for gold. Then teaching wife, it is a very difficult. Even though they'll tell when you go to a function, first they see is your neck, what they are wearing, not about how you have come, neck and the car which you have come. So please take some minimum jewelry. I'm not taking zero jewelry. Minimum jewelry, which we already some amount of jewelry we would have got from inheritance. The girl side would have got. Only that, polish it and wear it for every function. Don't take any new jewelry. Invest in sovereign gold bond. Very difficult. Even my wife, though if I tell, she will scold me also. But she will tell, put your sovereign gold bond on your neck.
Yeah. So there's another good question, sir. Gold mutual fund, are they similar to debt funds, sir?
No, sir. Gold debt funds are the safest. Gold funds depends, gold bonds and debt funds. You see, if you want risk perspective, debt funds are the safest. Whereas gold bonds are by the company, mutual fund. If the mutual fund house goes away, though there's SEBI, everybody is there, the mutual fund company goes away, like how it happened in Franklin Templeton investment, then you have to wait for a struggle. So it is for safety wise, it is debt funds are safer, whereas for investment or performance wise, gold mutual funds are better.
But that Franklin Templeton, everybody was paid after many years, sir. All the
Paid,
depositors
sir.
were paid.
That is because of SEBI,
Yeah.
but
Yeah,
what if they run away?
Correct. Sir, what about the final price of the gold at the end of 8 years? The
So
appreciation, is that amount taxable, sir?
No, sir. If you hold it for 8 years, suppose you have invested for 50,000. Now you are getting 65,000. The entire 65,000 after 8 years is tax free. Only the interest which you are getting for 50,000 is taxable.
Yeah.
So it is like a tax free gold appreciation deposit for your life.
Yeah. I think there are no more questions, sir, and we are coming to an end of our time also. And I thank you very much for giving an
So,
excellent.
no, so please, remember this date. Where is that? I think
September.
yeah, this one. So
Yeah.
remember this September 11th. Forget your wife's birthday. Remember September 11th. That is the day. Just buy some 10 grams of SGB and gift to her.
Yes.
Okay, tell it this is your birthday gift.
Yes.
Okay, you may get scoldings, but take it. It is a good scolding for you.
Sir, you remember in Bangalore, Dr. Shilpa, gynecologist, has presented gold talk, and she was convinced and was telling the audience that nowadays investing in a SGB is much better than buying jewelry. That is the message I think we want to give to our participants here, and it was well given and delivered by you.
Nowadays, the modern girls are wearing less jewelry. So don't hold gold for your daughters. They like simplicity is the best. So don't wear gold. Somebody will take it away. Okay, the robber is the beneficiary of physical gold. A robbery in the sense, the bank people in the form of locker charges or the real robber who comes to the window. Thank you.
Thank you very much, sir. We had a wonderful talk by Dr. Harish Gopal, sir, and we end the talk today. And this will be available following our talk on the, as usual, on Twin Cities branch of Indian Academy of Pediatrics YouTube channel. And all the previous 17 talks are available on YouTube channel, and also my channel, also only exclusively personal finance management previously recorded talks are there. Kindly see at your leisure, and please await for upcoming talks which we have already put in our WhatsApp group. And I have
one more thing, sir. All are
Yes.
telling very good talks, but please tell us what are the problems or what are the criticism also is very important for improving the talks.
Yes.
If you have any criticism, please put it in the group. We'll take it. We'll amend it. We are not like we should put only the good comments. Please put the bad things also, so that it will be helpful for everybody, because nobody is perfect. We are all are learning in a learning journey. So please post your comments in the groups so that it will be helpful. And please don't think that just because it is available later, I don't have to attend, because the josh of listening live, and you will, most of them will not. So somebody is writing, please demonstrate how to buy ETFs. So you have to go to a demat account and take ETFs, sir. Simple. So open ETFs, you can buy gold bees. So there's something known as gold bees. Okay. So gold bees is a gold ETF. Okay, I stop sharing, sir.
Yes, Zerodha has got, you just open gold Zerodha and you will get from the coin.
So this is the Nippon India. This is a gold bees. This is not a recommendation. Okay, so this is the gold bees. Okay, which you can buy, one of the gold ETF which you can buy. So please, there's a lot of things which you can buy as a gold ETF by the Kite platform. You can go to your brokerage account and search for gold bees, which is a popular one. There are many others which you can see. Okay.
Yeah, this is about 2001 or 2002 it was opened.
Yes,
and very liquid.
but
very liquid.
please diversify. Please diversify. Real estate you have to buy. Which real estate? Commercial real estate or REITs. You have to buy debt. You have to buy gold in the form of SGBs. Don't just keep on buying equity shares, mutual funds. Someday you will get hit like anything.
Yeah.
Thank you.
Yeah, thank you very much, sir. And Madhubabu Garu, please call me and I.
You have unmuted, sir. You have unmuted.
Thank you very much, sir, for a wonderful session on the gold today. It was a sort of a intellectually stimulating talk with a popular beliefs and also the traditions of buying gold jewelry, and now the availability of the digital gold in the form of Reserve Bank of India, Government of India's offers like gold, sovereign gold bonds, which comes in tranches at least twice in a year. So far it has been released, and you take this opportunity for the diversification, try to participate in the investment. You will never regret it. Thank you very much. My number is Madhubabu Garu 98480-34599. 98480-34599. WhatsApp group is there in that
Sir,
group.
one more thing, sir. People are joined the second group. They also are sending link for first
Yeah.
group. So don't do that. Both the groups are the same. Both are like two eyes only. So don't join both the groups. It will make duplicating.
Yeah, we have got 3 groups, so everybody is joining all the 3 groups. It's not necessary. If you are in one group, please give a chance for other doctor to join the group, and then the group is getting totally occupied. There are some silent spectators, some non-participants, non-actively sharing and contributing. Try and do that. It will become more lively, the group. And admins and the faculty will get encouragement to come prepared and get more knowledge and more information for sharing and participating. Thank you very much. We'll take leave and join next Sunday for another interesting session from Dr. Chetan Mundada on, I think, health and insurance. We are going to get upcoming wonderful faculty from Maharashtra, Manikon. I have contacted couple of the faculties who participated in that mega conference of 1,800 delegates. They are accepted to deliver webinars in our webinar also of the Pediatric Academy of Telangana. Thank you very much. See